All right, all right, all right. Let's make this more like that. How's that? How's that? How's everybody doing this afternoon? 1 o'clock, bright and early in the afternoon. Looks like it's going to rain. Tut tut. All right, look at that dead market. For the last hour, that thing's not been doing anything. Anything. Let's go over real quick and look at the news because we've been having a little news event going on this this week. And so let's come in here and go 2. What if we go to 1? What does that give us? No, that's too much. Let's go back to 2. All right, Wednesday, 5 a.m. We had a whole bunch of Fed's talk, Fed Bostic speech, Fed Marin speech, Fed Mahler speech, Fed Schmidt speech. So we've had lots of volatility today based on the Fed, but now it's all done and over with, and the market's dead now. Did you see? Notice how dead it is. Tomorrow we're going to have a whole bunch more Fed speak. All right, Barr speaks, Fed Marin, Waller, Bowman. They all speak again tomorrow. Barker, Moran, they must be having their Fed speak time. Are they up in Jackson Hole? I don't know. Let's see. So, anything fun happen? No. Yesterday we had some fun stuff happen. We had some big reports on the what do you call it when the devalued the dollar? That's what they did. All right. So today we're going to do some day trading, and and the title, if you remember the little marquee that I put up there, if I pull that up real quick, the little marquee, here it is. There's the one right there. We don't need this. We need this. This is right here. This is a picture of Bruce. How you doing, Bruce? Good to see you this afternoon. But the whole idea here is that we're having a little bit relaxing time, right? We're a little bit more relaxed. No pressure to trade. We want to relax and trade. All right. We don't want to take it so seriously. And the reason is because when you take things too seriously, you mess up. I think it's a good idea to take it a little bit less serious and just relax a little bit. All right. Sit back and watch. You don't have to make a trade. Don't put that kind of pressure on yourself. You put that kind of pressure on yourself, that's when you're going to end up making mistakes. All right. And you're sitting here looking at it. Now you have FOMO because you're sitting here looking at this market like, oh my gosh, I made such a big run here and then it died here and I lost a whole bunch of money. Oh, it's trading again. Now I got to trade some. You get all upset and you get all nervous and you start worrying about things and you start putting too much pressure on yourself. Oh, I got to make bank today because I got bills to pay. I got to go get some money. So you got to trade. The best thing to do is to not put that kind of pressure on yourself. Just do it for fun. If you can think about this just for fun, you're going to trade a whole lot better. I promise you. Now, the reason I brought this on, what brought this on is I had a meeting with one of our students who lost a little bit of money trading. Who hasn't done that, right? I mean, right straight out of the gate, I don't know anybody who really, well, I did. I made money right first thing right out of the gate. And I oftentimes say that's the worst thing you can do. And I would probably have to agree. Because when you make a whole bunch of money very first thing right out of the gate, then you think you know what you're doing. And you probably really don't. And so then what happens is you start having too much confidence and then you just end up giving it all back, which is what I did. 30 years ago, I started out my very first trade. I made $30,000. Can you believe that? My very first trade, I made $30,000. And so I thought I was the top of the world, man. I thought I was king of Siam. I thought I had just changed the world. I was working for, I think my income at the time was like 20. I started out at 22. And by the time I was doing that, I was probably making $25,000 a year. That was my annual income. In my very first trade in the market, I made $30,000. Could you believe that? I made more money in it was a stock trade, and I held on to it for like 6 weeks. But the market just went straight up. I made $30,000 in like 6 weeks. And I had been working, my salary was like $25,000 a year. I thought, can you imagine? Can you imagine? I thought that I was the king of the world. I thought I had just discovered, the elixir to life, which I guess I have, right? I mean, I fell so far in love with this thing that I just from that point forward, it was the rest of my life. So I did end up turning around and giving most of it back because I really didn't know what I was doing. So that's what spurred me into getting into this market and getting into these things and starting to do it and starting to trade and starting to be, um, turn my whole career around from doing something I didn't know what the heck I was doing into something I guess I ended up with a little bit of direction. And so, I've talked to and I've taught a whole lot of people. I mean, I've taught a lot of people. I've introduced a lot of people, thousands and thousands of people to the stock market and to the futures market. And I've helped a lot of people. And I've seen a lot of people do real well at this. And I've seen a lot of people really get their heinies handed to them. But usually what happens, I'll tell you the thing that usually happens is people come in and they get all excited about it because it's exciting. I mean, you look at this and you're like, well, how much money could I have made if I would have just taken that short position right there? Well, just from that arrow down to where it's at now, that's $245 in the 5-6 minutes we've been sitting here. There's just too much money in these markets. It's just like with $1,000 investment. Well, I think this one, yeah, about probably, let's see, 700 and let's see, day March, $771 investment. Not even $1,000. That'd been $245 sitting right there. That's like, it's like there's too much money in these markets. It's just unreal. There's unreal money. That's the problem with them. You look at these markets and you start to get such big dollar signs in your eyes that you lose perspective. You go out and you watch some of these guys on YouTube who trade. Most of them don't trade, but there are some that do. Ross Cameron is one, and I love Ross. I love to watch him. He's exciting. He's fun to watch. He's a entertainer. He's smart. He's everything you want in somebody on a YouTube channel. But there's no way in hell I can trade like him. You can't. I mean, I don't know. He tries to teach people, but he trades in such a way that there's no way in hell. I tried for a year to follow him and trade like him because he's such an amazing guy. But there's no way in hell I can't trade like him. I had to go back to my methods, what worked for me, a simpler strategy. And he teaches a lot of the same things I teach. I learned a lot of the same things he teaches. But it's always good to have a mentor, even when you are a mentor. And I kind of see him that way. But I just can't trade like him. There's no way I can't trade like him. But he makes millions of dollars. I mean, it's like in the last 6 months, he's made like $3 million day trading. So he's a good trader, but I can't trade like that. He like scalps tens of thousands of dollars in 30 seconds, right? I mean, he just plays 30-second he has like 12-second bars, 6-second bars, 3-second bars. It just gets down to that ridiculous small size. And I can't do it. I can't trade like him. So he's fun to watch though. But anyway, you go out there and you see these guys making $3 million, $4 million, $5 million a year day trading, and you think, oh, well, I could do that. And then you come and look at this and you're like, $245 in the last 6 minutes with a $700 investment. I can do this. You get excited. And so everybody starts doing it, and they jump in and they get the software and they get all hooked up. They get their monitors and they get everything they need to be a good day trader, open up their accounts, and they start day trading in the demo account. And they get really good at it in the demo account. They can make all kinds of money in the demo account. And so then they pop in, $5,000 and they throw it into the market, or 10 grand into the market. And they think they're going to be rich beyond their wildest dreams. They found their fantasy world of money making, and away they go. And the next thing they know, they're down $5,000. And they're like, oh shit, I just lost $5,000. And the next thing they know, they're down $6,000. And then they're down $7,000 trying to get it back. And then they got get back-itis, right? They get fear of missing out, and they start jumping back in at every little a little a popping a little popper in there, and they end up $6,000, $7,000, $8,000, $9,000, $10,000 down. And then they spend all this money on the nice computer and the monitors and the computer, the system and the software and subscription services and data, and they got all that stuff going, and then they just lost $10,000. They're like, oh, I thought this was so easy. I was making so much money in the demo account, and then I switched over to real money, and I can't make money. What's wrong? You're putting too much pressure on yourself. You're over trading. We got to make it just real simple and easy, and don't overdo it. If it's not looking perfect, don't take the trade. You know, the biggest problem I think most traders have is that they take too big of risks. You know, I have a mantra that is, if it doesn't immediately go in my favor once I get in, I just get right back out. Take the smallest loss I possibly can. If it doesn't just immediately go in my favor, I get out. Right? I mean, immediately. It's got to just right now. As soon as I get in, it's got to go in my favor. Never go back, never lose money. If it does, I just get out, take a small loss. But, you know, a lot of guys won't do that. They'll get in, and then if it goes against them, they'll hang on. How long can I hang on for it to come back? And then they get rewarded a couple of times where they're like, okay, well, it came back and I made my money, so that was a good move. They got rewarded for doing the wrong thing. And so then they do it again. They get rewarded for doing the wrong thing again. And then they get rewarded for doing the wrong thing again. Next thing they know, they just lost $5,000 because, well, it worked last time, it worked the time before, and it worked the time before. And then what happens is they're down $5,000, and then they come and talk to me because they didn't come to talk to me before. They came to talk to me after. And so then I'm like, okay, what are we going to do? Well, it's time to get back to the demo account. Okay, well, let's go trade some demo account now. I'm down $5,000, I'm down $17,000, I'm down $15,000, whatever. You know, they lose, plus all the equipment they bought, plus all the software, plus all the services. And then they're like, I want to return my software. I want to return my computer. I want to return my monitors. I want to cancel all my subscription services. I lost $5,000. I'm not going to do this. This is hard. Or else they don't. They say, well, I'm going to do this. You know, I got my services. I got everything set up. I just need to practice a little more. So then they become professional paper traders. You know what a professional paper trader is? That's someone who jumped into the market with real money too early, lost money, and really wants to do this, but now they're scared. And they don't dare go back in and trade real money again. Because last time they traded real money, they lost $10,000. And they're not going to risk doing that again. So now how much are they going to start their new account with? Well, they're not going to certainly trade it with 10,000. If they're going to trade it at all, I might put a couple $100 in there, but I ain't going to trade real money because I lost a whole bunch last time. But I really want to. I want to do this. So for the next 3, 4, 5, 6, 7 years, they're professional paper traders. And they never do go back with real money because they got scared the first time. It's really hard to get over that second hump. Way worse than the first one. Okay, the second one, the second entry into the market after you've already lost some money and you stopped, you went back to paper trading, and then you want to go back in and start trading real money again. That is the hardest move in the whole world, to start doing that again. So that's why I say that I think that the best thing to do is to follow that little, you know, that little picture I drew for you again this morning. This one here. And relax, right? I don't know why that keeps popping up on the screen over there. I put it over here. But just relax, kick back, relax. Don't take it so seriously. Just trade once a day if you have to get started. Just one time. Just go in and sit there and don't do anything. There's so much money to be made in these markets. You don't have to put a lot of pressure on yourself. And the best thing is not to try and trade for a living right out of the gate. Just do it for fun. Just do it for fun. Just like you're trading some video game and the gold in there is, you know, you're just trying to collect some gold. There's these little games that you play, right? Video games where you go in and you try to collect numbers or points or gold or something. Just think of it like a game. It's like an adult video game. It's not that kind of adult video game. It's, you know, a video game for adults. So just relax. Look at this guy. Look how relaxed he is. He's really relaxed. All right. He's friends with the big bull there. So we want to just be relaxed. Don't get all crazy. Don't get all nervous. Don't get all worried that you're missing something. You don't have to trade every single trade. You don't have to take every single move. If it doesn't feel right to you, don't do it. This is a perfect little bow tie. Can't help point it out. Look at that perfect little bow tie. Well, it's not exactly perfect, but it's just a nice little bow tie in there. It's also a nice little ABC pattern. So 1, 2, 3. So it could continue to flush out of this thing. Had a little pop up, which is kind of common. Turn that off. Get off of there, auto scale. So this market rallied up, went sideways. Now it's starting to move a little bit, coming into power hour, getting a little green state in here. We could put a little order in here if we want to. Don't get all crazy and nervous and worried about it, but you can drop one in here, a little stop order to trail up on that ATR dot. If it turns as far it starts to fall, we'll take a little position short. If it doesn't, hey, no big deal, right? No big deal. Don't fret. Don't worry about it. Just take your one order if this is the one you want to take, and if it doesn't work out, walk away, come back and take one order tomorrow. Take one order the next day. You don't have to trade all day long and trade a million times. Take one trade a day. Take 3 trades a day if you want. That's my 3 strikes, you're out. You can come in, you can take 3 trades. Now, what I like to do is I like to say, look, if you take your one trade and it makes you some money, that's okay. That's good. You can take another trade. If it loses you money, well, that's okay, as long as it didn't lose you more than you made the previous time, right? Don't lose all your money. You're still in. Well, you can take a 3rd trade. And if your 3rd trade makes you a little bit of money, you're done for the day. Walk away. Just get your feet back into it. Just get your feet back wet. Just get it back into it. Take it, relax. Don't worry about it. If you don't take a trade today, that's all right. You haven't taken a trade for the last 5 years. Just because you decided to start trading real money again doesn't mean you suddenly have to start trading 42 times a day. If you haven't been trading for 5 years because you're still in demo mode, and I don't know if any of you are, I can't see your accounts. I don't know what you're doing. I just have a lot of experience with this. How many of you am I talking to you? How many of you out there am I talking to you? All right. So I'm going to scoot this in there a little bit tighter. We'll go into 5 right now. All right. So just don't put pressure on yourself. Just go in and take one trade a day. Let's say I'm going to do one trade and then I'm going to call it quits. Whether I win or lose, one trade. And then, maybe a couple of weeks after doing that, you can come in and you can say, all right, I've been doing okay. I'm keeping my own. I'm making a little money. Kirk says he's trading his own money. Good for you, Kirk. And so what we want to do is the next time we're going to come in, we're going to say, okay, I'm going to take my one trade. And, if one trade a day is too much, try just 2 trades a week. Just try 2 trades a week. That's okay. And if you lose just a little bit, that's okay. Just make sure that when you get in, if the market doesn't immediately move in your favor, just get out. Just get out. Just do what we're doing here. Just one little tiny trade. And then if you make money, you can take a second one. All right. You can wait and wait. If you don't feel comfortable taking a second one, don't take a second one. But don't feel like you have to make a living trading right out of the gate. You might not make a living trading for forever, for years, right? It took me years to be able to trade for a living. I always had other jobs. I always had other ways to make money. I always had my own businesses. I always had real estate. I always did something else to make money that takes the pressure off of having to make money from trading, so that you don't have to feel like, well, if I don't make a trade today, I can't pay my bills. I bought myself a new Tesla. Now I got to make $500 today or else I won't make my payment. Can't, if you put that kind of pressure on yourself, that's the first thing that's going to kill you. And then, of course, people come and watch me. And I think the other big problem is you come and watch me trade, in these YouTube channels, and you see me trade like 40 times in an hour, right? Oh, man, look, that's the way you're supposed to trade. You're supposed to trade like land, trade 40 times in an hour. No, you're not. I do this to show you how to use the software, how to set up things, how software can work, how the triggers are working, how the different patterns are working. This is what I'm doing here. This is education mixed with a little bit of entertainment. This is what we call financial entertainment. All right. We're doing a little financial entertainment here. And in the process, hopefully you learn a little something, but don't learn bad habits. Don't think you're supposed to trade 40 times a day just because that's what Land does in his demonstration classes. When Land trades, he trades once or twice or 3 times a day. It depends on what the market's doing. If I can get a couple good trades off, great. And if I make a couple good trades, I'll take a couple more. But as soon as I start losing money, I stop. That's it. And if I want to trade some more, I'll come back and do it again later. But usually I got too much to do. I'll go off and do some more work. Work on Pit News Magazine, work on articles, work on, working on other stuff. I don't always just sit here and trade all day long. Plus, I got lots of other trades that are longer term trades. So they don't take as much effort, energy, and work, right? We can just kind of wait for those to happen. And then we just adjust those once a week or once a month or every couple months, or we get a new dividend comes in, we got to figure out where to put it. So we have to, do a little work, but longer term trades are a little bit easier because you don't, some of these things we're doing with, with the UBI portfolio is a little easier. You don't have to spend so much time trading. But when you're doing this, you have to, carve out a piece of time. So when are you going to trade? Well, usually we like power hour. Sometimes power hour kind of sucks too, not always a good time of day. The morning, I mentioned that the other day when we were talking about it, that the morning time, the morning session is sometimes not so easy either. You think it's easier because the market moves faster, but sometimes because the market moves faster, you have to be more on your toes, and the market jumps all over the place. And so the risks seem a lot worse. So because the market moves so fast, you can lose money a lot faster too. You can make money faster, but you also lose money faster. So you have to be a little bit better on your toes. You have to be a little bit quicker. You have to be a little bit more nimble. You have to be a little bit better with the software. You have to be a little bit better with your mouse to take those faster trades, right? But that's why it's important to get the software. Look at that piece of crap. Just stopped us out. See, if it doesn't immediately just go in your favor, I just get right back out. So I lost $35. Is that going to hurt me? No. But is it gonna give me a little pain in the behind? Yeah. I got to pucker my butt a little bit for $35. I don't want to lose $35. But, in the name of this game, that's not very much. If that's a lot of money to you, then you probably should go trade the micro minis. All right. So that would be $3.50 instead. And that might not be so painful. So $35 just stopped me out, but I'm not worried about that because the market can move. If I could just catch one of these, look at that. That was $285. So if I lost $35, I'm not going to really cry about it. But that's my one trade. So maybe if I'm only trading once a day, that's it. I'm stopping. But don't let that $35 loss keep you from trading again tomorrow. All right, or next hour, or however long you take the break. Don't let it be 5 hours or 5 years. Don't let it be 5 years. Look, there's another opportunity to take a trade where very low risk, very small risk between my entry and my exit, which is the yellow dot. So I can put that back in there and try again. And if I try 2 or 3 times, I lose 2 times, 3 times, I'm done. I'm not going to keep here. I'm not going to sit here and go through a situation like this where the market just died, right? If you try every one of these little green bars or every one of these little arrows and you just get your handy handed to you every single time, you got to at some point admit that the market's not going to trade for you. It's not going to immediately go in your favor. So you got to get out. You got to stop trading. So you got some money left to come back tomorrow. That's the biggest problem is most people don't walk away. They can't walk away. They're down $30, $60, $100. They can't walk away. I got to get it back. I promise if I can just get my $100 back, I promise I'll quit. I'll stop trading. And then that's where you end up $1,000 down, $2,000 down, $3,000 down, trying to get your money back. All right. You got to be able to not quit trading based on the money you're making or losing. You got to quit trading based on what we call risk and money management strategies. Right. So if you're going to say 3 trades, it's 3 trades. If you're going to say 1 trade, it's 1 trade. If you say you're only going to trade once a day for a week, every day for a week, then only trade once a day. Just because you got in there and you lost 35, well, I'll take a second trade just to see if I can get my money back. I know the market will go in my favor this time. I know it will. Right? So if the market's dead, the market's dead. Oh, every time, just as I stop trading, that's right when the market takes off and runs. No, I would if I'd been in there. I would have, Lan, you told me to stop trading, and if I wouldn't have stopped trading, I'd be rich, rich, rich beyond my wildest dreams. I'm not listening to Lan Turner anymore. Okay, well then don't listen to me. I'm not telling you what to do. I'm just telling you what I do, what I suggest. I give you some suggestions. Ooh, that's a little close right there. I think I got my ATR too close. I went down to 5. Market decided it didn't want to be that good. It's not doing much for us right now. Let's see. Where are we going to have this thing? 8, 7. 7's good. In a moving market, 7's good. 6 is even better in a moving market, but now the market stopped moving. This is the Dow. Let's go over and look at the NASDAQ, see what the NASDAQ's doing. Let's go over to the ATR. Let's bring that down to 6. 6, 5. I think 6. Let's wait for just a second. This market's just kind of floating a little bit tired right now. Is it looking we're going to get our first green candle to make a new high? Let's watch and see. Could be a little ABC pattern up. Right? And anticipate a rise in price. Put your order in there. I don't want to scalp. See if we can't catch a little bit of a move in here. I like to get in when there's a very small risk, like when it looks like the market's getting ready to take off and move, and my yellow dot is still very close to my original entry. Now, you might get stopped out more often doing that. Oh, I'm in the micro. But that's okay, because if you get stopped out more often, they're little tiny stops, little tiny risks. So you can trade a little bit more if you'll take those little tiny risks. Sometimes the dots are a long ways away, sometimes they're very close to the entry point. If they're very close to the entry point, I'll be more likely to jump in, or even jump in with multiple contracts. If it's far away, I'm less likely to want to jump in because the risk is a lot bigger, even though the signal might be a little stronger. So that also is a quantity thing. Sometimes if the market's moving nice and you can get an entry where your stop is really close, but it feels confident the market's going to go in your favor, you can go into the larger quantity. You don't have to always just trade one. We always just trade one here because we're beginner class, right? We're a beginner group. We always just trade one. Once we get going a little bit, we can do 2s and 3s and 4s, and we can have multiple stop orders and multiple limit orders and different levels and get kind of fancy. But, that's for a more advanced strategy or a more advanced class. We're just getting started here. We're just learning to trade once or twice a day, right? Once or twice a day. So we caught this little trend, trying to break up a little out of this red one. The first green candle make a new high. Do we know if it's going to continue? Do we know if it's going to go up? No, we don't. So that's why we hold our stops right tight, because if it doesn't immediately just go in my favor and make me money, I just get out. I can't make the market move. I can take the signals, but I can't make the market move. This is all the strength I've got to make the market moves right here. My little dude. Oh, this is the red one because that makes the market move down. Oh, see, I shouldn't have picked up the red guy. I picked him up and he made the market go down. I got stopped out. I should have picked up this guy here. He's not green, but he's my long market. See these little bottles right here on him? Can you see the little bottles? They're full of good luck charms right in here. He's got a bottle here and he's got a little bottle here. They're full of really good luck charms. All right. But that's the only power I got to move the market. If the market's not moving, I can't make money. So you got to know when to trade too. So if you take a few trades and nothing pans out, it's because the market's not working. It's like panning for gold, right? You take your pan, you go down to the river and you shake a few gold pans out, see if there's any gold. If there's no gold, well, you go somewhere else. No gold here right now. Now you're getting a little double top in here. Are we going to get a little break and a little fall here? Maybe the market will flush back down here in a little double top formation. Could. It's a pattern. Is it a good one? Not a great one. So it's not an A setup. This was more actually an A setup because we had a nice little up and down. Problem is it's in a downtrend still. See this high right here? So this wasn't an A setup because this was a high and we're taking a long position from a low point. So this is actually A, B, C. We should kind of expect this market to flush down. Keep going down in the downtrend, right? It didn't break higher here, so we got lower highs and lower lows. But it's just not doing anything. Let's come over here to this one. See, we're not getting any. We got our 3 drive pattern up. We got 1, 2, 3, A, B, C. So watch it come in here to the blue lights. And when the blue lights come in, that's probably a better spot to be taking our short position. What are we at right here? 6. Let's go to 7. Trade. Okay, we want to take a short position right here because the blue and the yellow are coming together. That's a sell scalp. Where's my 10? Ugh, that's a scalp. All right, let's drop this down here. I'm going to grab that, pull it out of the way, see if we can't get a little bit more money than. All right, here we go. All right, we got our order in there again. Feel a little bit better about this one, taking a short position. Come on. Now, they immediately go in my favor. I'm just going to get out. The market, I can't make the market move. I can't make the market move. If it doesn't go and it says it's going to go, I can't make it move. I can't do that. All I can do is put my order in there. And if it doesn't immediately go in my favor, just get back out. Yeah, but man, what if it turns and drops again? Well, you can always get back in, but it screwed up your position. So you're done. You can't take it. You can sit there and jump back and forth, jump back and forth, jump back and forth. It doesn't do you any good to jump in, jump out, jump in, jump out, jump in. You got your signal and it failed. So it failed. Wait for the next one. Don't put any pressure on yourself. You don't have to make money today if you don't use this as your primary source of income, right? Just be more cautious about it. Right now, the market's doing nothing. It's dead. So go do something else. What else is there for us to do? Well, we're in a class where we're learning how to use the software. So there's nothing else for us to do. We could go look at other markets, but that's not the point of this class. We could go look at some other things. Let's go look at some other markets anyway. This thing's not having any fun. Let's go over and look at some other. Let's pull up a new portfolio. We'll just get a blank portfolio. Let's go look at some other markets. Let's go look at lean hogs. We don't trade lean hogs often enough. We should trade some lean hogs. Let's go to December lean hogs. Come down to a 1 minute chart. See what December lean hog. The market's probably closed, so that's not going to do us a whole lot of good. But we could go back and look. Look at that market, man. That's lean hogs. Let's go look at natural gas. Natural gas. I want. Which one do I want? Let's go look at the mini natural gas. November. That should be good. All right. Let's go down to a 1 minute chart. So many fun things to trade. Oh, look, see, this is why it's hard to trade some of these markets, because on a 1 minute chart, there's not a lot there. Trade it out on a 15-minute chart. Even still. What contract month are we looking at? Let's look at December. Let's try December. We might get something better there. Still not getting anything on mini natural gas. Let's go into regular natural gas. Look at the November contract. Yeah, it looks a little better. Okay, so there's natural gas. Let's put it on our cheat codes. There you go. There's natural gas. Natural gas open right now? Let's go see. I don't think so. Key. Close. Close at 3 p.m. Oh, it's still open. It's just not trading. Not a lot of action. 3 p.m. Says it's supposed to be open. That's a dead mark. Oh, there's a move. Okay. This broke higher. You want to trade natural gas? What's it going to cost us to trade a natural gas contract? $3,000. All right. Let's put one on. We're going to go long. All right. And we're going to bring this right up here. Yes. So we'll take care of that myself. We'll put that right there. All right. We're trading natural gas. It's a little on the slow side, but hey, if it goes, it goes, right? Whatever makes you money. Let's go look at something else. How about gold? We could go trade gold. The whole market's pretty slow today. Oh, look, we're past that. That's not, what contract month are we on? That's October. Let's do December. December gold. Let's go in and go down to a 1 minute chart. Look at gold just going straight up. Putin's buying China and Putin are buying as much gold as they can get their hands on. Every single little nugget that comes out of it, a little piece of dust that comes out of the ground, they buy it. They buy it as fast as they can find it in the ground. What do you think that's going to do? Think it's going to flush? Think it's going to suddenly go like this? Or do you think it's just going to do this? What do you think? What do you think? What do you think about gold? You could come and trade gold. How much is it going to cost us? Well, we're going to have for the day margin, it's $14,000 to put on a contract of gold. This is full-size gold. Let's go into gold. We don't want to have full-size gold. Oh, that's Comex gold. How come I don't have my other gold contract in here? A, B, C, D, E, F, G. Gold, Comex gold, micro. That's micro gold. I don't know. Let's turn on micro gold and see if we can. That's probably not going to do us much good. Let's do, not February, December. December micro gold. Let's go look at it. 1. Come on, gold, pull up. Ain't got all day. Okay, I can ashy. Oh, it's flushing out. We should have put in our $15,000 trade. See if it pulls back a little bit. Okay, let's see. What else we got in here? Oh, we like crude oil. Let's go look at a little crude oil. We like trading crude oil. I haven't traded crude oil in a long time. Crude oil. 1 minute. Come on, crude. Oh, it's flushing out too. Look at it go. Look at it flush. Woo, that's a flush. There's like a toilet on that one. That's really going. The thing rallied good. Now it's coming back. Where's it going to come back to? Probably back down around this 50% level. That's where the computer quant systems will probably bring it. First target's going to be that 38.2 right there. Let's see how close it gets. And then right down in here. See where it goes. See how good of a guesser we are. What else you want to trade? Let's look at silver. Ooh, look at silver. So hi ho, silver. This is December silver. These are all things you can trade in the futures market. We always just trade the indexes because they move the most and the fastest. But you can also come and trade some of these slower markets. I got a buddy, a pal, you've heard me mention him before, Mark Peterson, and he's always telling me, Len, why are you trading those indexes? They trade too fast. Slow down. Go trade something that's not trading so hard and fast. He likes to trade some of these other things. I like to trade the indexes because they move. Because I got an A-type personality. I can't wait. I'm like, I ain't got time to wait for that. How much is that, Len? Well, from that entry point to where it's currently trading, that's $900 with a $11,000 day margin. So you have to have $11,000 to trade this one. All right. It's another reason why I trade the indexes because $1,000 you can trade the indexes. A lot of our beginner traders, they don't want to have to put up $11,000 to take one contract in silver. Soybeans. Let's come down here and look at some soybeans. Soybean oil. That's the retail one. So that one actually moves a little bit faster than the base. Uh-oh. What did I do? December. Let's close that one. Look, we're getting a whole bunch of these things all stacked up. Let's come in here and go to a 1 minute chart on soybean oil. Soybean oil moves a little bit. Market's closed. Well, we'll look at it. Look at that, though. Man, that was a beautiful market. I could have probably even made money in this market. Wow, look at that. ATR. Bring that down a little. Whew. That was a good market today. What were we doing? Not trading crude oil, or not trading soybean oil. Kind of died out here towards the end, didn't it? What time does it close? Closes at 12:30. Okay, let's come back here. I haven't traded a lot of soybean oil. It's been a long time since I traded soybean oil too. Swiss franc. Let's go look at the Swiss franc. Do you know you can trade the foreign currencies over here? So this is Swiss franc against the US dollar. All right. So that's the daily basis. Let's go look at a 1 minute chart. Okay. Spreads on these are a little bit wider. A little frustrating to trade. So that thing's pretty flat, pretty sideways, not doing a whole lot. Did we get stopped out? What order did it closed? Natural gas. We lost $30. It didn't go in our favor. What about Swiss franc? What about the Swissy? You want to trade the Swissy franc? It looks like it wants to go down, doesn't it? You should have pulled the trigger, Land. You'd have pulled the trigger. Yeah, but it might go down, turn around, go right back up again. Might do one of these. Got 1, 2, 3. I don't know. These things roll like snakes. Remember that about the currencies. They kind of roll like snakes. They do this snaky thing. Makes them easy to trade, also makes them very hard to trade. And they're usually pretty flat. They're pretty flat markets. That's $60 right there. $62 on an investment of $2,475. So that's pretty flat. They're pretty flat markets. Now you can scale them out, make them look like they're trading big, but that's not. They're not really trading that big. That's just scaling. They're just more like really what they're doing right here. It's kind of not really doing anything. Okay, so we'll put that there. See if we can have one winner. Look, we haven't had a single winner all day. Every single one has been a loser. Every single one's been a loser. If you'd have done just the opposite of what you land, you'd be up $250 if you'd have just done the opposite. Yeah, play opposite day. Remember when you used to do that in high school and wear all your hats backwards and your shoes backwards, your pants backwards? Play opposite day. Here's wheat. Let's go look at wheat. The markets are so dead today. 1 minute. Hello, John Moran. How you doing? I haven't seen you for a while in here. It's good to see you. Look at that. Wheat's closed. It was a dead market today, too. Look at that. Holy cow. Can't day trade that one. You gotta come down. Let's turn that one on a range 25, see how it looks. That's a little better. That's a range 25 on wheat. Bring this down a little bit more. But realize, look at how long that is. Range 25 on wheat. That's like this top of this was back in September 17th. So this here was 14 bars. That's 5 days. That took 5 days for the market to fall like that. How much is it? Key. $911. But if you're going to keep it overnight, which you would, off the range bar 25 to trade that, you'd have to keep it overnight. You have to have $1,800 for a single contract. So that slows things down for you right there. You're like, Lance, slow things down. There you go. Wheat. Come and trade wheat on a range bar 25 and just take those little roly-polies. You're going to have to stay in there a little bit longer than you have to keep it overnight, but that's okay. Nothing wrong with that. Just costs you a little bit more. Goes from the day margin of $900 up to the initial margin of $1,800. And then you just hold it overnight. Put your stop on the yellow dots and away you go. Can always work out? No. That's why you use stops. T-bonds. You know what? I used to trade the 10-year T-note all the time. That was a good one. I liked it. Let's go look at the 1 minute. Very seasonal, believe it or not. Oh, we didn't trade it on the 1 minute chart, did we? Let's go look at range bar 25. You know, you can trade options on some of these too. All right. All right. There's wheat. There's UST notes. This is not a charting platform, Mr. Abakash. This is a trading platform. There's a big difference between the two. All right, let's see. I'm going to come in here. So that's T-note, US 10-year T-note. Yep, we're just all in red today. Not been having a lot of luck. Market's not going anywhere. It's just dead. So we've been playing around, just putting orders on lots of different markets. Looking at all the different stuff we got you can go trade in the futures market. So this is gold. We're watching gold a little bit here. We're getting a little bit of a buy signal right there. So we can put our order in there, put our limit order up here. See how that works, how fast that is? We just put those orders in there. We've already got all 3 orders all placed in there, all on the screen. Automatically all programmed in there to automatically trail. Limit order comes up, take your profits there. Stop order trails up behind. We're going to trail on that little yellow dot right there, which is the ATR. I can't make the market trade. I can't make the market move. We can take the signal, but if the market doesn't go, this is all the power I got right here to make the market move. So you put your order in, but if the market doesn't move, I can't make the market move. All right, let's see if gold will move a little bit for us. Doesn't look like it. It might be an ABC pattern going the other direction, but we'll see if it'll rebound. It could be a little ABC going this way. We just get a couple green bars and then drop in the market. John just got back from Italy. Well, now I'm jealous. All right, here we go. See, you get one little trade and you get it in the right spot. It'll make up for your losers. We got lots of losers. Just make tiny little losses. See if we can just catch something. It's not going to go. Come on. Don't die on us. Keep it going. Just come up there and test the previous high. That's all we want you to do. You don't even have to make a new high. Just test it. 40 ticks. Come on. Give us 40 ticks out of here. Come on, baby. Come on. Come on, come on, come on. We could put it at our break even. That would make $400. We could come in here. We're down 258. See, we're up at 280 right now. We could take that off and just say, well, we got our money back. And then we go work from a point of strength. Or you can see if you can't make a little bit of money, but you're risking the fact that you might not get your extra money, but you had your money back. So that's why I say I like to put my limit order in there and get my money back. Then I'm working from a point of strength. Okay, so there we go. So now we're back to $95. We're back to green. So whoever that was in here belly aching because I was all red. Well, go somewhere else. You don't win every trade. All right, so now we're back here from a point of strength and we can just wait and trade again. All right, I like to get, if I get the opportunity to get my money back, I'll take my money back and then we can look for a point of strength. Let's go look at live cattle. We got live cattle. That's not a good one. Let's go look at December live cattle. Live cattle. I think it's probably going to be closed. Is it closed? Yeah, it's closed. Closed at 12 o'clock. Let's go look what it did today, though. Look at that. Wow. That market really moved going into the close, didn't it? What do we have on the ATR? It was good at 6. Whew. That was a lot of money. From down to the short side, that was $330. Doesn't have Sunday. The Sunday open. Oh, there. Where? Oh, day margin right there. $1,800 for day margin. So $330, $1,800 in a day margin. That's a 1 minute chart. And then it turned around and went all the way back up, $420. What'd you do in Italy? Yeah. What part of Italy? Where'd you do? What'd you go? What'd you do? Tell us. Tell your story. How was Italy? I was looking at what it cost to go to Italy just the other day. But I got to go down to St. George and teach classes. Next week, classes start next Tuesday, bright and early. Not bright and early. Actually, go ahead and sleep in because our classes don't start until 6 o'clock at night. Tuesday, 6 p.m. in the Udvar Hazy Building, second floor. Be there or be square. All right, come and join me live and in person for a live class. What are we going to be talking about Tuesday night? Next Tuesday night in St. George, Utah, live at the university. We're going to be teaching an introduction to the stock market. So this is a brand new class for brand new people who've never opened an account in the stock market before, who don't have stock class. All right. So never don't have a stock account, don't know anything about the stock market, but they'd like to get involved and start playing and doing some of the stuff we're talking about here. So this is brand new people. Just this, what is a stock? What is stock market? How do I open up an account? What is an account? Who do I open accounts with? All that kind of stuff. How does an account work? How do exchanges work? How does my brokerage money get to the exchange? All that kind of stuff. That's what we talk about in this class. Tuesday night and Thursday night next week. Tuesday, and it's just a 2-night class to teach that stuff. And then we skip a week, I think, or maybe we don't even skip a week. And then we roll right back into the first stocks class where we actually start talking about different stocks to buy, how to read markets, how to read charts, and which charts to buy, which ones to not buy, which ones give dividends, which don't. Then we just go and roll right on through for the rest of the semester. Every week or two, we have another series of 3 classes, cover a different topic. All right, so come and join us. Come and join us. All right, we'll run down through them one more time. There's natural gas. Was natural gas way up here when we first got looking at it? I think it was. If we'd have put that order in, we'd have probably done pretty well. That one's no good. That one's no good. Gold. Gold. So we made our money on gold. That's right where we just about took off. It looks like we got about our max out. We could try again. It's going to try and go again. It's got the red to green. We could try one more time right here before the market closes. See if it's going to make one more little pop higher. I'm not going to take a big risk. Come in here and scoot this up for now. So if it doesn't just go immediately, we'll just pop right back out. Come on, baby. It's micro gold, so there's no money in it. It's $10. Just cover commissions right there. We got to go a little higher. Come on, come on. Come on, come on. Are we going to pop? Come on, gold. We pull out our little guy. Make sure we don't pick up the red one on accident. Get our pin out. Tormund, Catalina, Syracuse, then Agrigento. How was the food? That's what I want to know. How was the food? Come on, come on, go up, go up, go up, go up. Gotta go up, little market. It don't want to go up. We got 5 minutes till the market closes. Come on, we can get a little bit out of this. Come on, we can get a little bit. Come on, just a little bit. This will be our last trade. We'll call it quits after this one. See how long we stay in the market here. Well, food was awesome, of course. That's what I whenever I look at these trips to go overseas and see all these things, I look at all the restaurants. I'm like, what restaurant would I go over there for? Come on, market. Come on. Come on, baby. This is the micro. It's got to move quite a bit to make any money. Let's see if it'll go. Come on. Of course, this market doesn't close. If you look over here, market close time is 3 o'clock p.m. So it's got another hour. But the stock market closes in an hour. So this will probably slow the volume way down too. We're not getting anywhere. It was green for a second. And it decided that was it. That's all it had in it. Come on, baby. Oh, we got stopped out. Down 14. All right, so we ended up with 81 bucks. Probably paid the commissions and fees. So pretty flat day. Didn't have a lot of excitement in the indexes. Let's go back and look at it real quick. I want to go look just before we cut you loose. Mini Dow, NASDAQ. Which one were we in? We were in the Dow and the NASDAQ, right? Dow and NASDAQ. Let's just go look at indexes 1 minute. I'll try that. Oh, that's the NASDAQ. 2 minute. Go to 1 minute. This is one we were looking at. We're trying to get something out of this one. Of course, right when we started looking at all the other markets, probably this one when it started to run, right? That's what always happens. Yeah, not too much luck in this one. Maybe a little bit. We could have maybe caught a little something or other once or twice. I don't know. I don't know. Maybe we'd have made it. Maybe we'd have been able to get a little bit of green out of some of that. We'd have tried hard. Maybe. All right, guys, that's all I got for you. We're going to let you go today. I got one little thing for you real quick.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, that's it. That's all I got for you today, guys. We're going to let you go, and if you have any questions, please let me know, and we'll catch you tomorrow morning bright and early for UBI portfolio trading. So be here at 8 o'clock a.m. and we'll take a look. I got about $25,000 sitting on the sidelines waiting to decide where I'm going to put it in. We looked at that on Tuesday, didn't find any place. Maybe we'll find some place to put it in tomorrow. All right, so we'll see you tomorrow morning.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.